Hey everyone, welcome back to Corporate Decoder. Today, Fidelity Hereford Street Trust just filed their annual shareholder report, and I am seeing some interesting numbers in their Treasury obligations. Quick note, this is not financial advice, just my take on public filings for educational purposes. In this filing, we will dive into the financials of several funds to see what is really going on behind the scenes. This main filing covers a lot of ground for Fidelity Hereford Street Trust. It's a big umbrella organization for many different investment funds. Think of it like a hotel with lots of different rooms, each room being a separate fund with its own investment goals and performance. Let's look at a few of these funds. First up is the Fidelity Treasury Only Money Market Fund. This fund is basically designed to keep your money safe and easily accessible, kind of like a super high yield savings account, but within an investment fund. For this fund, the cost of a hypothetical $10,000 investment for the last year was $43, which works out to be 0.42% of that investment. That is pretty low, meaning most of your money is working for you, not going to fees. The fund itself is massive, with $16,940,567,988 in assets. That is over $16 billion. When a fund gets this big, it means a lot of people trust it with their money. Now let's see where the money is going. For this fund, a huge chunk is in investments maturing in 31 to 60 days with 24.1% and 61 to 90 days with 21%. This means the money is parked in very short-term safe places to keep it liquid and ready to go. And importantly, 100.9% of the fund is invested in US Treasury Obligations. This is about as safe as it gets in the financial world. Treasuries are backed by the full faith and credit of the US government. Interestingly, the filing notes that this fund modified its investment strategies and risks during the period. This means they made some tweaks to how they invest, likely to adapt to changing market conditions or new regulations. But because it's a money market fund, these changes are probably minor, focused on maintaining safety and liquidity. Next, let's check out the Fidelity Series Treasury Bill Index Fund. This fund aims to track a specific market index, specifically short-term US Treasury bills. It's meant to be a very low-cost way to get exposure to this part of the market, and the cost here is extremely low. A hypothetical $10,000 investment would cost you $0 or 0.00%. This is because the fund is designed to just mirror an index, so it needs very little active management. The fund's performance was influenced by a few key factors. US taxable bonds did well, partly because the Federal Reserve cut interest rates 3 times in the second half of 2025. When interest rates go down, bond prices generally go up. The fund tries to minimize differences between its investments and the index it follows. This fund is smaller than the last one, with $2,030,384,119 in assets. It is still a big fund, over $2 billion, but not as massive as the money market fund we just looked at. As expected, almost all of the fund, 99.2%, is in US Treasury obligations, specifically zero coupon bonds. These bonds don't pay interest regularly, but instead are sold at a discount and mature at their face value, with the difference being the investor's return. Now let's shift gears to the Fidelity Money Market Fund. This is a general money market fund, meaning it can invest in a broader range of short-term, low-risk debt, not just treasuries. The cost for this fund is $43 on a $10,000 investment, or 0.42%. This is the same cost as the first treasury-only fund, suggesting a similar structure and fee arrangement, though the investment strategy is broader. This fund is enormous. It has $134,691,553,806 in assets. That is over $134 billion. This is a flagship fund that many people use for everyday cash management. Looking at its maturity diversification, a significant portion, 53.8%, is in investments maturing in 1 to 7 days. This highlights its focus on being highly liquid and readily available, which is typical for money market funds. The fund invests heavily in repurchase agreements, making up 50.9% of its assets. A repurchase agreement, or repo, is essentially a short-term loan where one party sells securities and agrees to buy them back later at a slightly higher price. It is a common way for money market funds to earn a small return on cash they hold. Closely related is the Fidelity Money Market Fund Premium Class. It is essentially the same fund, but with a different share class, typically meaning slightly different fees or distribution arrangements. For this premium class, the cost is a bit lower at $31 or 0.30%. This suggests the premium class might have lower fees for certain investors, making it attractive for larger accounts. The fund size is listed as $134,691,553,806, identical to the regular money market fund. This confirms they are different share classes of the same underlying pool of assets. The asset allocation is also identical, with 50.9% in repurchase agreements and 32.6% in US Treasury obligations, showing the same investment strategy. Now let's look at the Fidelity Government Money Market Fund. This fund specifically focuses on government debt and repurchase agreements backed by government securities, aiming for a high level of safety. The cost here is $43 or 0.42%, matching the retail share classes of the other money market funds. This fund is absolutely massive, with $452,711,941,602 in assets. That is over $452 billion. This is one of the largest money market funds out there. Its investments are heavily weighted towards repurchase agreements at 41% and US government agency, debt at 31.6%. This fund is doubling down on government-backed assets for maximum safety. And here is the premium class version of the Government Money Market Fund. Just like before, it is the same underlying fund with a different share class. The cost is $33 for this premium class, or 0.32%. This is slightly higher than the regular money market premium class, but still very competitive. The fund size is listed as $452,711,941,602. The same as the regular government money market fund, confirming they share the same asset pool. The asset allocation is also identical, with 41% in repurchase agreements and 31.6% in US government agency, debt, showing a consistent strategy across the share classes. We also see a daily money class for the Government Money Market Fund. This typically means it is structured for very frequent transactions or for institutional clients. The cost for this daily money class is $71 or 0.70%. This is a higher cost, which is common for share classes designed for high transaction volume. The fund size remains $452,711,941,602, the same large pool of assets. And the asset allocation is also the same, with 41% in repurchase agreements and 31.6% in government agency debt. This class likely serves a particular need for very active cash management. Then there is a Class S for the Government Money Market Fund. Share classes like this often have specific distribution channels or investor types they cater to. The cost here for a $10,000 investment is $43 or 0.42%. Putting it in line with the retail share classes. Again, the fund size is the same, $452,711,941,602, indicating it's another share class within the same large government money market fund. The investment breakdown is consistent, 41% in repurchase agreements and 31.6% in government agency debt. Another share class here is Class K6. These classes are often used for institutional or retirement plan investors. The cost for this class is $26 or 0.25%, which is noticeably lower than the retail classes, reflecting potentially lower distribution expenses for these types of investors. The fund size is still the massive $452,711,941,602, and the asset breakdown remains consistent at 41% repurchase agreements and 31.6% government agency debt. Next, we have the Capital Reserves class for the Government Money Market Fund. This class typically implies a focus on capital preservation and potentially higher yields within the money market space. The cost here is higher at $97 or 0.95%. This is a significant difference and suggests this class might have structure or fees that make it more expensive for the investor, perhaps for a specific advisory service. The fund size remains the same large $452,711,941,602. The core investment strategy of 41% repurchase agreements and 31.6% government agency debt is consistent across these classes as well. Finally, for the Government Money Market Fund, we see the Advisor M class. These are often used by investment advisors for their clients. The cost here is $71 or 0.70%, which is higher than the retail classes and aligns with other share classes designed for advisory channels. The fund size is still the same, $452,711,941,602, and the asset allocation is identical, confirming the underlying assets are shared across these different share classes. Moving on to Fidelity Flex Government Money Market Fund. Fidelity Flex funds typically offer a broader range of investments with no sales charges, aiming to provide value. For this fund, the cost is $0 or 0.00%. This is a key feature of the Flex series, meaning the investment advisor is absorbing the costs, which is great for the investor. This fund is much smaller, with $221,277,787 in assets. It is a newer or more niche offering compared to the massive money market funds. Its investments are 38.3% in repurchase agreements, 33.8% in US government agency debt, and 27.4% in US Treasury obligations. This is a solid mix of very safe assets. An interesting note here is that the fund's contractual cap on proxy and shareholder meeting expenses expired during the period. This means those costs might now be higher for the fund, which could slightly impact future returns. Next up is the Fidelity Treasury Digital Fund. The name suggests it might involve newer digital or tokenized approaches to investing in treasury assets. The cost for this fund's liquidity class is $19 or 0.18%. This is quite low, especially for a fund with potentially newer or more complex infrastructure. This fund is also on the smaller side, with $171,679,853 in assets. It is holding 104.7% in US Treasury obligations. This indicates some use of leverage or derivatives to enhance returns or manage risk, as the percentage exceeds 100% of net assets. Similar to the Treasury-only money market fund, this Treasury digital fund also modified its principal investment strategies and risks. This is noteworthy for a newer fund or one with potentially innovative strategies, suggesting adjustments are being made as it matures. We also see an on-chain class for the Treasury digital fund. This strongly suggests direct engagement with blockchain technology or tokenized assets. The cost here is $15 or 0.20%. It is a bit higher than the liquidity class, but still very low, indicating efficiency despite the use of potentially advanced technology. The fund size is $171,679,853, the same as the liquidity class, confirming they are separate classes of the same underlying fund. The asset allocation is also identical, with 104.7% in US Treasury obligations, suggesting the same investment holdings. And just like the other Treasury digital fund share class, it also modified its principal investment strategies and risks, highlighting ongoing strategy refinement. We have the class ALS for the Treasury-only money market fund. These classes are often designed for specific distribution channels. The cost here is $38 or 0.37%, which is a bit higher than the standard retail share class. The fund size is $16,940,567,988, the same as the regular Treasury-only money market fund. The investment breakdown is consistent with 100.9% in US Treasury obligations. And similar to the regular Treasury-only money market fund, this class also modified its principal investment strategies and risks. Jumping to some of the other sections, the report mentions that Fidelity Hereford Street Trust has adopted a code of ethics that applies to its president, treasurer, and chief financial officer. This is standard practice to ensure ethical conduct among key leaders and is filed as an exhibit to the report. The board also determined that Laura M. Bishop is an audit committee financial expert and is independent. This is important because it means there is someone on the board specifically qualified to oversee the audit process and ensure the financial statements are accurate. Now, let's look at the fees paid to auditors. For the Fidelity Series Treasury Bill Index Fund, Deloitte billed $37,600 for audit fees in April 2026 and $7,700 for tax fees. These are the costs to have the financial statements reviewed by an independent auditor to confirm they are reliable. PricewaterhouseCoopers or PwC billed various amounts for audit-related tax and other fees for several other Fidelity funds, including the Fidelity Flex Government Money Market Fund and the Fidelity Money Market Fund. For the Fidelity Flex Government Money Market Fund, PwC billed $40,900 for audit fees and $2,200 for tax fees in April 2026. These costs are necessary to ensure transparency and trust in the financial reporting. It is interesting to see the total fees billed by Deloitte and PwC for services related to the entire group of funds. For services billed by PwC related to fund service providers, the amount was $9,428,700 in April 2026, down from $9,765,100 in 2025. These are significant costs, but necessary for compliance and oversight. Now we get to the heart of the filing for the Fidelity Treasury only money market fund. This section contains the detailed financial statements. The schedule of investments shows us exactly what the fund owns. As we saw earlier, it is primarily US Treasury obligations, totaling 100.9% of net assets. Over $17 billion are invested in various US Treasury bills and notes that are maturing soon. For example, they hold $131 million in US Treasury bills maturing on the 1st of October 2026, with yields ranging from 3.67 to 3.71%. These are very short term and very safe. They also have a large holding of $440,300,000 in US Treasury notes that mature in January 2027, tied to a floating interest rate index. This shows they are actively managing the duration of their holdings. The statement of assets and liabilities gives us a snapshot of the fund's financial health on the 30th of April 2026. Total assets were over $17 billion, with liabilities around $477 million. This results in net assets of nearly $17 billion. The investment in securities alone is valued at over $17 billion, and the cost was very close to that. This indicates the fund is holding its investments at fair value. The statement of operations shows the fund's income and expenses for the year. Investment income from interest was over $607 million. Expenses, primarily the management fee, were about $61 million. This results in a net investment income of over $546 million. Looking at the statement of changes in net assets, the fund saw a significant increase in net assets of over $4.4 billion in the year, ended the 30th of April 2026, showing strong growth in shareholder value. The financial highlights provide a per share view for the Fidelity Treasury Only Money Market Fund. The net asset value per S-Share remained at $1, which is characteristic of money market funds aiming to maintain a stable share price. The total return for the year was 3.68%, reflecting the interest earned on its holdings. The expense ratio before and after reductions was 0.42%, showing that costs are kept low. For the Class RS, the financial highlights also show a stable $1 net asset value per S-Share and a total return of 3.73% for the year. The expense ratio is slightly lower at 0.37%, which is good for investors in this class. The notes to the financial statements are crucial for understanding the details. It explains that the fund is part of Fidelity Hereford Street Trust and operates under US generally accepted accounting principles. It also details how investments are valued. For money market funds under Rule 2, a -7, securities are valued at amortized cost, which is a method that approximates fair value but aims to keep the share price stable at $1. This is standard for money market funds. This section explains how income and expenses are divided among different share classes. It clarifies that each class might have different fees like transfer agent costs, but the main income and expenses are shared proportionally. The auditors, PricewaterhouseCoopers LLP, gave a clean opinion, stating that the financial statements fairly present the fund's financial position. This is a crucial sign of confidence in the fund's reporting. The distribution section notes that a significant portion, 98.84%, of dividends came from interest on US government securities, which is generally exempt from state income tax. This is a tax advantage for investors. Now let's look at the financial highlights for the Fidelity Series Treasury Bill Index Fund. Its net asset value per S-Share ended at $9.95, and the total return for the year was 4.02%. Notably, the expenses before and after reductions are listed as 0%. This aligns with its index tracking strategy, where the cost is minimal as the fund simply aims to replicate an index. The notes explain that this fund is a part of Fidelity Hereford Street Trust and offers shares only to other Fidelity funds. It also mentions investments in Fidelity Central Funds, which are essentially internal Fidelity money market funds used for efficiency. Moving to the Fidelity Money Market Fund, the financial highlights show a stable $1 net asset value per S-Share. The total return for the year was a strong 3.77%. The expenses before reductions are 0.42%, which is reasonable for a large money market fund. The expenses net of fee waivers are also 0.42%, indicating no significant waivers were applied in this period. For the premium class, the financial highlights also show a stable $1 net asset value per S-Share. The total return is 3.89%, slightly higher than the regular class, while the expenses net of fee waivers are slightly lower at 0.30%. Now for the Fidelity Government Money Market Fund, the financial highlights confirm a stable $1 net asset value per S-Share. The total return for the year was 3.72%. The expenses here are listed at 0.42%, which is consistent with the other large money market funds in the Fidelity lineup. The premium class maintains the $1 NAV, and shows a total return of 3.82%. The expenses net of fee waivers are 0.32%, slightly lower than the regular class, and in line with other premium share classes. Let's look at the Fidelity Flex Government Money Market Fund. The financial highlights show a $1 NAV per share and a total return of 4.16%. What stands out here is that the expenses before reductions are listed as 0%. This is a major benefit of the Flex series and means the advisor is absorbing these costs, leading to great net returns for investors. Finally, the Fidelity Treasury Digital Fund shows a $1 NAV per S-share for its liquidity class with a total return of 3.91%. The expenses net of fee waivers are very low at 0.18%, which is quite good for a fund potentially using newer technology. For the on-chain class, it also has a $1 NAV per S-share. The total return is 2.79%, which is a bit lower, but the expenses are even lower at 0.20% net of waivers. This indicates a focus on cost efficiency even with what might be more complex underlying technology. Towards the end, the filing includes exhibits. There is a code of ethics filed, which is a document detailing the ethical standards for the trust's leaders. It also includes certifications from the principal executive and financial officers confirming the accuracy of the filings. Signing off on this report are Laura M. Del Prado, President and Treasurer, and Stephanie Karen, Chief Financial Officer. Their signatures indicate they've reviewed and confirmed the accuracy of the information presented in this comprehensive filing. Overall, this filing shows a robust group of money market funds from Fidelity, all focused on safety and liquidity, with low costs for most investors. The Treasury digital funds appear to be exploring new technologies while maintaining a focus on core Treasury assets. The Flex Fund's zero expense ratio for management fees is a really strong point for investors looking for maximum value. The diversity of share classes across these funds allows different types of investors to access these safe and liquid investments. The biggest takeaway I'm seeing is Fidelity's continued commitment to offering a wide range of very low cost, safe options for cash management, even as some explore newer digital frontiers. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you like this video, give it a thumbs up, comment below with your thoughts, and subscribe for more. Check out the Discord linked in the description.